Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day or had an amazing day. It's likely later in the day here for you. Late for me, of course. Apologize for the delay, but just been traveling a lot again here over the next couple weeks. I'll be fairly busy, so my timing might be a little off, but my goal is to help us understand best practice, big picture, of course. If you want to become a better trader, CryptoCache.tech is a site, link in the description below. And feel free to become a community member. We have over 200 active members right now. It's awesome. We have a Trading Academy Signal group, and of course, just amazing community at your back helping you become a better trader. So take a look at that in your own time. What we want to do here, of course, as well, is just kind of take a quick look at what's going on with this recent decrease. And then furthermore, kind of anticipate what's going to happen tomorrow with CPI data release, right? Because that is essentially what we're seeing happen in the next 24 hours. In other words, 8:30 a.m., I believe it's Eastern Standard Time, we're going to hear a CPI data release, and the price will likely shoot up or down from there based on the news. Right? It's more of a fundamental catalyst, so just be mindful of that. Some of the TA we're going to look at here today is kind of, it comes with a condition of how that's going to happen tomorrow. So just be mindful of that, all right? So taking a look here, of course, something we want to kind of understand, first of all, is that we are still above this ascending trend. So let's go ahead and take a quick look at the larger time frame, kind of see here. The trend is our friend still, right? So we've got these two candle wicks down, but at this point we haven't broken below. Now, if it were to break below, I don't think it'd be the end of the world. We still have a couple of support levels to rely on, more specifically 21,600, which is a key level resistance for quite some time. So I think we're still looking good in the overall sense of the uptrend, as long as we stay above 21,600. Okay. Now, obviously we don't want to see that. We'd much rather bounce off this Fibonacci retracement level of 22,600. But just knowing the range there, 21.6 to 22.6 is likely a support channel. Okay. That would provide us with higher lows, as well as just a nice reiteration of a strong support level in either level. All right, so just something to kind of pay attention to. Let's go ahead and take a quick look at the moving averages, kind of see what's going on here. We can see that the 20-day simple moving average is tentatively working as a support level still. So again, losing that would be disadvantageous, but staying above the 50 is the most important, which we can see here. 50-day SMA is kind of just hanging out down below. So all good, nothing wrong with this. This is all perfectly normal stuff. The price comes down further, the sky is not falling. In fact, we might even see a candle wick down to one of those two areas sometime tomorrow. That's a possibility. What I'm recommending, of course, and again, I'm speaking to my community members and pretty much anyone else that's listening, is just to wait for the CPI data to happen first, and then, of course, identify specifically if we have confirmation in either direction. It will take some time, preferably even just waiting for the candlestick closure tomorrow would be appropriate. But again, there's different situations, of course, that can occur, but better safe than sorry, and just kind of waiting on the sidelines. Right now, I'm not sending out any signals because I'm being patient and waiting for the right time. It's essentially the concept. So we've taken some decent profits on Bitcoin to the long side, and of course a short recently from Rose as well. And essentially things are looking pretty good in that sense, but we don't want to overdo it. All right. Again, over trading is a problem. It's very synonymous with average beginner traders and a low success rate. Right. So again, try to pick your battles. Heaven forbid you lose one, you get back in the game, but you don't get in because you're upset. All right. No revenge trading. There's no point in doing that. Let's take a look at some other things here as well. Something to note is we are still up over 50 on the RSI. That's very helpful, giving us that confirmation that once again we're above some key level support. So that the micro we're going to look at next, but the macro is looking very good in that regard. Same story, of course, on the monthly and the weekly. We can look at that again a little bit later, just more relevant. But for the moment, we're still above some nice key level supports on the monthly and the weekly, so that's a very positive sign. So for lack of better terms, the macro looks pretty good even still. Once again, we break down below 21,600, different story, because we'll be underneath the 50-day SMA, etc. It wouldn't be a great thing. For the moment, though, great news is we're above a lot of key level supports and we're looking pretty decent. We don't really need to bother with the MACD because it's kind of drawing dead. That happens a lot when you have the price action stay kind of steady sideways. So not much else we can kind of really note there, but if we take a look at the 4-hour, we are below both moving averages. Again, not a problem because based on the recent price action, the way things are working, I wouldn't worry too much about that. The key is that we're up over the 200-day set moving average still, which is running concurrent with this ascending trend. All right, so again, mostly positive stuff even still. What could and should likely happen tomorrow is we'll probably see some crazy candle wicks and then likely a continuation of the upside here to keep those higher lows coming. It seems more probable than a sell-off to the downside. Again, CPI data, it's kind of an interesting thing. Every time in the past it's happened, it's always some type of crazy candle wick up or down. And you truly never know either what's going to happen because we can't foresee the future, right? Even though this is a somewhat of a prediction, I can predict to you that tomorrow will be messy, and that's almost always the case. So why not steer clear of that and ensure you don't get stopped out? Doesn't make any sense, right? So again, that's kind of where we're at there for the 4 hour. Last thing we want to identify is that we are under 50 on the RSI. Again, not super important based on the fact that we have been fluctuating above and below the moving averages. So to me, I'm not really concerned with this being below 50, but we do got to recognize that it could likely work as a resistance. We also understand, or need to understand, that we have the MACD diverging at this point. Doesn't mean it's going to continue further, but it does imply that there is potential for further downside, and the bottom hasn't been found yet. So in that turn, don't just take a long position because the price comes down and you feel like it's a good value. Dollar cost average by all means, but if you're going to take a leverage position, ensure you're using a small balance and just keeping yourself, protected. Small balance as well as a small amount of total available portfolio is appropriate. In other words, when we take trades, I always recommend no more than 5 or 10% per trade, because at any given time, especially when the bull market comes up, we could have 5 to 10, 15 different trades open at one time. And if that is the case, you got to be ready for that. And based on the type of trades that I like to take, it works out the best to have low amounts and small position sizes when you're using leverage. So please recognize that. So that's where we're at in the 4 hour. The 4 hour is mostly, I would say, generally speaking, we're slightly bearish on the 4 hour, but we still haven't broken any of these key level resistances, right? Or supports rather. Obviously, we've got the ascending trend line and we got the 200-day SMA. Both of those should be our get out of jail free cards, right? That's hypothetically what we're looking for. So the 1 hour here, let's go ahead and see if there's anything else we can extract. If we take a look at TD sequential, we can see we hit a state of exhaustion to the downside. We hit a 9, got a reset up to a 4. Now we're potentially back on the way down. So again, all the more reason not to just kind of buy the dip, because the dips have a tendency of continuing, and we want to make sure we found the bottom with at least a higher low. In other words, we want to see this push up here, continue some type of higher low pattern. It doesn't have to have higher highs. It just has to have higher lows. Okay, so that's why I try to identify. Higher lows are extremely important. If you can get them to just continue to ascend, you'll have somewhat of an ascending type of breakout, and it eventually or inevitably goes to the upside more so than the downside. All right, something to pay attention to there on that. But TD sequential is kind of just telling us we hit this recent exhaustive state, and that we should be at the bottom, but it's not confirmed. All right. Same thing with the Ichimoku cloud here. This is really telling us here that a short position is the best one to keep open, and to take a long position would be kind of, stacking the cards against you, so to speak, because we have the lagging span free and clear price action. We've got the conversion line below the baseline, and of course, the oh so familiar lower lead on the cloud, essentially telling us that we are very far away from a successful uptrend. Okay, so what should happen is the price should continue here, kind of progress like this, and then naturally the cloud's going to want to come down, price comes up above, and that would be a case in point where we might want to consider taking entry. Again, we want to wait for confirmation, which I feel is at least 3 or 4 hours above the cloud, but at this point we can see and confirm that we are effectively on the wrong side of the tracks for a long position. Doesn't mean you want to short your shirt off either, because of the simple fact that there's no confirmation, there's a lot of support levels, and it really doesn't tell us much at this point as to which direction it wants to head, especially with the data coming out tomorrow. So do yourself a favor, wait on the sidelines. I'm sure you'll be either happy or upset that you did it. There's no right answer, right? Because you will miss out on opportunities, but it's literally a gamble of what's going to happen tomorrow. Based on the data here, I would expect the price action to go sideways and down a little bit further, and then likely bounce to the upside to retest the 24,000 range. Because again, 24,000 appears to be a pretty strong resistance level for the moment, and we got to respect that as well. Okay, so all in all, good stuff here. Honestly, I don't feel upset with what's going on. It's still continuing to ascend. Once we break this trend, of course, different story, different conversation. But until then, we got to kind of hold true and anticipate higher lows are going to continue, even though tomorrow, depending on the data, it might contradict that pattern. Right? We'll evaluate that again. I'll try to cover this again tomorrow morning after the data comes out and kind of see where things are at, and hopefully help us understand what's going to happen next. But if you're part of my community, I can assure you signals will continue to flow. We just need to wait for confirmation. And to me, confirmation comes after major events, but also the trading day is over. So such as right now, this is the best time to kind of evaluate things and kind of take a position if you were to. based on the overall sense that the one-day candlestick has closed. And we do need to acknowledge here, this is the elephant in the room, we have a bearish engulfing candle. And that is something to note because bearish engulfing candles typically continue downtrends, or of course, inverse applies with bullish patterns as well. So again, at this point, it does look like there's going to be potentially more downside, but we do have a support at 22.6 and 21.6. Those are two key levels that I feel are going to hold if it does come down that low. Wouldn't be the end of the world. Just add to your position, dollar cost average wherever possible. That's what I'm doing again. $20 a day, really simple. You can do whatever you like, but that's just a comfortable number for me. And it works out very well. I've been averaging my price way down, and it's nice to be able to add to my position and not worry too much about the buying low and selling high aspect of things. Again, this is my HODL portfolio. It's something I'm always adding to, and you should too. But at this point, if you're going to take a trade, do not consider a long position until we have confirmation. Back above the cloud, if you're considering a short position, that might be viable at this point, but I don't think you're going to catch a lot of downtrends. I think 22.6 should provide a decent support, but again, CPI data could wipe all that out. Right, so again, that's kind of the concept. Just be mindful, and I would just say patient. Patience is key here, and let's make sure that we wait for that data to come out and kind of take a position from there. Okay. So that's it. That's all I got here for you. Thank you so much for joining me. If you want, again, become a better trader, CryptoCache.tech is a website, link in the description below. I do offer a trading academy, community, and signal group. Absolutely looking forward to working with you. You have yourself a great rest of your day. Thanks again for your time. We'll see you.